Let's go ahead and go through a quick example of a capital lease where the payments are made at the beginning of the period or on an annuity due basis. Now this is going to be much more realistic than the examples we've done to date with payments in arrears, because generally when you lease or rent an asset, payments are made at the beginning of each period. So let's assume that on January 1st, 2020, lessee and lessor companies are going to enter into a lease agreement. The asset has a fair value of $1,000 and is on the lessor's books at $1,000. It's going to be a 2-year lease with payments due at the beginning of each period. Lessee and lessor both use a 10% discount rate, and there will be a $100 bargain purchase option. The first order of business is going to be to compute the lease payment, so we start with the fair value of the asset, subtract the present value of that bargain purchase option, and that gives us the present value to be recovered via the rental payments. So now the question is, what 2-period 10% annuity due has a present value of $917.36? The answer, of course, is $480.52. So let's go ahead and record this on the books of both the lessee and the lessor in parallel. The lessee records the capital lease at the present value of the minimum lease payments, the present value of the rental payments, plus the present value of the bargain purchase option. And they immediately pay off $480.52 of that. So just fresh out of the gate, they've paid off almost half of the lease obligation. Same thing happens over on the lessor's side of the world. They sign this capital lease, they record a lease receivable for $1,000, and they immediately receive almost half of that from the lessee. So both the lessee and the lessor have their lease obligation and lease receivable respectively immediately paid down to $519.48. At the end of the year, no cash is going to change hands, but the lessee and the lessor have to record their interest expense and interest revenue. So the lessee is going to record interest expense, 10% of their lease obligation balance, $51.95, and we accrue that as interest payable. Likewise, on the lessor's books, they're going to record interest revenue of 10% of their lease receivable, and that's going to be recorded as interest revenue and interest receivable. The next morning, the lessee makes their second payment of $480.52, and again, what they're doing with that is they're paying off the accrued interest from the night before, and they're paying down another $428.57 of their lease obligation. The lease obligation is now $90.91. Now, if you think about it, when we're done with this at the end of 2 years, we need to see an obligation balance of $100. That's the value of the bargain purchase option. That $90.91 is the present value as of January 1st of that end of year $100. Same thing is going to happen over on the lessor's side of the world. They received that check for $480.52, splitting it between the interest they accrued the night before and the payment on the receivable, and their receivable is now down to $90.91, the present value of the $100 they expect to receive at the end of the year. So at the end of the year, for the last time, lessee is going to accrue interest on that $90.91 lease obligation. So they're going to record interest expense of $9.09, and sort of a nice touch to go ahead and add that to the lease obligation. That will bring our lease obligation up to $100 even. So when the option is exercised, the lessee writes a check for $100, and that pays off the lease obligation. Similarly, for the lessor, they're going to accrue their interest revenue of $9.09, and again, rather than debiting interest receivable, they can simply go ahead and add that to the lease receivable, with the result that when they receive the cash payment for the bargain purchase option, that essentially pays off the balance in their lease receivable. Now, at the end of the year, the lessee could just as easily credit interest payable. That would just make the entry for paying the $100 a little bit more involved. Likewise, the lessor at 12/31, they could debit interest receivable. That would just make the receipt of the cash a few minutes later a little bit more involved as far as the accounting is concerned.